What's up traders, welcome to Failures to Displace. So in this video we're going to take a quick look at this morning's London session, specifically at the second macro here, which is the one that I generally trade. There was a really nice setup from previous day value area low, so I'll run through that and how that played out. But also, prior to me coming to the screen, there's a really nice example of the initial buy side liquidity to initial sell side liquidity range trade as well that I look for every single morning. So before we jump into the analysis, if you are new here, then do please consider subscribing. I'm dropping videos like this on a regular basis. It's part of my journaling process, so I can monitor how my strategy plays out and also my own performance as well, whether I execute on the strategy as well as I should do. Definitely consider subscribing and smashing the like button and leaving any comments down below as well, any questions that you've got. It's always great to hear your feedback. And so with that said, let's take a look now at the chart and just see what levels we're going to be looking at. So today's Monday morning, so it's Monday the 2nd of December. So we need to mark out our levels of interest for the session. So initially I'm going to be marking out the previous day's value area, high, low and point of control. So you'll see these highlighted in yellow here. So to establish those levels, I'm using the session volume profile indicator on TradingView. Just crunch this up so you can see it. So this here is the session volume profile. I'll show you the settings that I've got, so if you want to replicate these, you can do. I've got my session volume profile just to look for the regular trading hours volume. So that's primarily where the most volume for the day is traded. And so that has the most impact moving forward when price retraces to those levels. So the timings that I've got set, this is all based on American New York time. I'm looking for 9:30 in the morning, which is the New York Stock Exchange open, through to 4 p.m. The value area is set to 70, so it's looking at 70% of where the volume is traded, or it's highlighting the main 70% of volume during the day. And I'm using a row size of 240. So this is giving me kind of a real detailed analysis of where the volume is, so I can see not only where the value area high and low is, and the point of control, but also any high volume nodes as well. So if there's any significant spikes in this area, they're worth noting moving forward, because when price retraces to them, we can sometimes see a reaction at those levels as well. So that's the session volume profile indicator. And all I'm doing is I'm just dropping a ray in TradingView over those specific levels so that I've got them as a point of reference, looking specifically for entries around those areas in the London session. As well as previous days session volume, I'm also looking for the previous weeks as well. So you'll see on here that I have PW value area high, VAH, PWPOC, and somewhere down here will be previous week's value area low as well. So to establish the previous week's value area, I'm not using an indicator for that. I'm using a tool called the fixed range volume profile. So essentially this just allows you to drag over a section of price action, and then it will highlight the various volume levels within that section of price. So I'm using that tool to drag over from the Sunday open from last week through to the Friday close. So I've got the full range of last week, and it will show me then the value area low of last week's trading range, the point of control, and the value area high, which again, I'll just go ahead and drop a ray across that, so I've got them for reference in my charts for the rest of this particular week. So the two initial levels that we're looking at, we then need to make note of where the current new day opening gap is. So every single morning, I'm assuming that price will be drawn to the new day opening gap in the London session. So in my back testing this year, well, back testing and forward testing this year, I've found that it's more often than not, the new day opening gap will get tested in the London session. So if the new day opening gap, as it is today, is above price, then that will give me an initial bullish bias for the morning. So I would expect price to drift back towards the new day opening gap. So we can see, as today is a Monday, the new day opening gap is up here. It's been classified as a new week opening gap as well, because obviously it's the start of the new week. I'm using a plugin to identify new day opening gaps and new week opening gaps. I just have them set to 5, so it's showing me 5 previous new week opening gaps and also 5 previous new day opening gaps from the 2024 mentorship that ICT did. He mentioned 5 was a good number, so I've just gone with that. And we can see that we do have the new week opening gap is currently embedded inside a previous new day opening gap as well. So it's an additional confluence. When we see them kind of overlapping each other like this, it does give us additional confluence that price may go higher. And obviously in a higher time frame context as well, you will realize that price is very, very bullish at the moment. I mean, we're up at nearly all-time highs anyway. And so that is favoring long positions. Doesn't mean we can't go short though, as you'll see in this analysis here. So those are the main levels that we're looking at then, just to recap. Previous day's value area, previous week's value area, and then where is the new day opening gap in relation to price? Is it above or below current price as we come to our charts? You'll see here that I have an indicator that's highlighting previous session's liquidity. So this is a session liquidity tracker that I've got. We've got the Asia high up here in green. So this is untapped liquidity. And you'll see that the Asia low has been swept this morning. So this liquidity has turned red as well. An additional indicator that I'm using just to help clarify where session liquidity might get ran. This is time-based liquidity, which is always quite significant. When you're taking out session highs and lows, you will often see a reaction at those levels. And let's jump into now what was happening this morning. I wasn't at the charts for this initial setup here. However, it's interesting and it is something that is part of my strategy if it presents itself when I do get to the charts. I think moving forward, ideally I would like to get to the charts an hour earlier, and I would maybe be able to take advantage of these because I seem to be missing quite a few of these setups. So I just want to log this again so that I've got it as part of my journal process. So what I'm doing, this blue line indicates midnight open. The first half hour of trading, so between midnight and 12:30, will set the initial balance for my trading session. And so that we have initial buy side liquidity, which is the highest high set in that first 30 minutes of trading, down to the lowest low, which is initial sell side liquidity. And what I'm looking for is a range trade based on this, meaning that we will sweep one side of this initial balance and then go down and target the opposing side. You'll see this again in price action. It recurs very, very often. So if you get to the charts in time to see this, then there's a high probability if you can get in at one of those extremes, you will be able to trade to the other side of the extreme. And so that's what's happened this morning. So let's just run through now price action in this first hour of trading before I actually got to the charts this morning. So we can see that we set the initial buy side, we set the initial sell side, price pumped back up again. You'll notice in this area, we've got the point of control from the previous week, which is this blue line, but also this descending blue line is VWAP, so volume weighted average price. So price is generally drawn back to VWAP. It will pull away from VWAP and then come back and retest VWAP constantly throughout the day. So it's very often, if you see prices extended away from VWAP, you will get a return to VWAP. What we've got in this area is we have the initial buy side liquidity exactly at VWAP. And price comes in, takes the initial buy side liquidity and taps VWAP without being able to close over this level. And we can see that we've got, let's just turn this to a, so this was initially a bullish fair value gap. We come back here, as price came, it came, retested previous week's point of control, accelerated away, leaving a fair value gap, taking out initial buy side. So I would class this as a manipulation. We've had a displacement towards this level of liquidity, but then immediately closed back in, rejecting from VWAP and closing back inside initial buy side liquidity here. We've engineered liquidity with this high that was set in Asia as well. We've been unable to take this, so we have a draw on liquidity higher, but we're currently unable to take that. This shows me potentially that the range trade is on, sweeping initial buy side down to initial sell side. You'll note as well that this is coming in inside the first macro of the day. So this is 1250 through to 110. So this is the first macro of the trading day. And we're going to be looking for algorithmic price signatures that are going to show us if we're in a buy program or a sell program. So kind of what's the telltale signs that we may be switching gears and going into a sell program. So they left us this lovely fair value gap here, which was immediately closed over. Through our understanding of ICT, we want to see that the 50% level, which is this green dotted line in the middle of a fair value gap, gets respected if this is going to be a strong fair value gap and a continuation move. We can see immediately we close over the whole of the entire fair value gap here, disrespecting 50%. Shows that this is not a strong bullish fair value gap. Bullish PD arrays are now no longer being respected. Therefore, we could be switching into a sell program. While we're closing over the bullish fair value gap, we leave a bearish fair value gap as well in this area. So you got candle 1, candle 3 here. Candle 2 is the bearish candle in the middle. So we've got a gap in between these 3 candles as well. So where these overlap, so the bullish fair value gap overlapping with a bearish fair value gap, this is a BPR. Now, if you're new here, you maybe don't know about my obsession with BPRs, but go back through any of my previous videos, I absolutely love them. When I see a BPR, it shows me that there has been an aggressive move out. This is a manipulation with an aggressive move back in, trapping traders on the wrong side of the market. And that's what's happened here. Price has aggressively moved out. We've got all these people going long, aggressively moved back in the range very quickly, trapping anybody that's longing, trying to expect a breakout of this buy side liquidity, leaving displacement back through this fair value gap. So we've not only confirmed this is an inversion fair value gap, we've left our BPR, and as I've just mentioned, we're watching very closely for the algorithm to respect 50% of our fair value gaps. And you can see exactly what's happening here. We're wicking into the BPR. We're not closing beyond 50% of the BPR. We're not closing beyond 50% of the inversion fair value gap as well. More signatures that this has now flipped to a sell program. Inside a macro, we will likely go and sweep sell side liquidity after we've swept buy side. At this point, gives us an indication to go short at that point. So you'll see the red arrows that I've got on here. These are an additional confluence that I'm using on top of my ICT entries. So this basically, you don't need these additional confluences that I'm going to run through right now. You could just take this off ICT theories. You don't need to be adding the volume and the delta that I'm going to show you right now. This is all valid enough. However, this is just an extra comfort blanket for me to show me that I'm on the right side of the market. This is a divergence candle that I call it. We had one divergence candle respecting the BPR. We left a fair value gap as we displaced away from that BPR. And on the retest of this, we also had a second divergence candle. So what's a divergence candle? Let's jump into Tradeovate now. So Tradeovate is the platform that I use to trade with Apex. So this is showing us the actual live market data from the CME. And this area of price action right up here, the area of price action that we're looking at. So I used 2 indicators on Tradeovate. And you'll notice the chart looks very different to the TradingView chart because the candles are showing different things. So TradingView is showing whether we have green candles is bullish price closing, red candles is bearish price closing. The first indicator that I'm using on Tradeovate is something called delta candles. So the color of the candles isn't based on the closing prices, it's actually based on how many buyers and sellers are in that particular candle. So the delta of the candle. Bright green candles means there are a lot of buyers in the candle. Bright red candles means there are a lot of sellers in the candle. So it's measuring market buys and market sells within these particular candles. What I'm looking for is a divergence candle, is where these dots come in. So this is showing me that this was a bullish delta candle. There was a lot of market buys in this area. However, price was unable to close bullish. Price closed bearish. We had a bearish candle at 54 minutes past midnight. Bearish candle into a point of interest, which is the 50% of this BPR as well. This is showing that despite there being more market buys in here, there was likely a large limit order absorbing all of these buys. So somebody is taking the opposing side of these buyers, expecting price to go lower. So this is showing me absorption in this area. Now, given the fact, my understanding is that most of us retail traders, we market buy in and we market sell out impulsively, trying to get in on any given move. Larger players with a lot more experience and a lot bigger wallets, they'll use limit orders at specific areas. Delta doesn't show limit orders, it only shows market orders. So what I'm seeing here is that market retail is trying to buy this up, and there is probably a larger player here using a limit order, taking the opposite side of that trade. We want to trade in line with that smart money, that bigger player. We've got a few confluences building up here. We have our ICT confirmation, we have our ICT setup. Then I'm also seeing that retail is on the wrong side. Retail's trying to buy this up. And somebody is selling it, the smart money is selling it off. So you would take the entry on the close of that divergence candle, inside a macro, targeting the opposing side, the opposing sell side liquidity. So my target is always to close out 10 points. You can see with these delta candles, when you do get them, if you get them right, time it correctly, you're expecting price to run away aggressively, which is why you'll see in some of my live executions, I'm going to break even very, very quickly. It's because I don't expect any pullbacks. I'm expecting the smart money to have trapped all of the buyers up here, and they want to get away from them as quickly as possible. A lot of these buyers will enter impulsively without setting stop losses, without having proper risk management in place, and the smart money is just going to want to drag them in the wrong direction as quickly as possible, not give them a chance to get out of their trades. So if you get your entry correct, you're expecting a very quick run away, so you can be aggressive with your stop losses. We missed the first divergence candle entry. Obviously, as I mentioned, we had the retest into the displacement fair value gap that we left here with a second divergence candle. What's interesting about this one is it's closing over previous week's point of control. We have the initial sell side as our initial target, previous week's value area low as well down here, which is this yellow line, and also we had the Asia session liquidity down here as well for a potential, if you wanted to hold it all that way down, kind of 18 to 20 points, all happening inside the macro, which is the main takeaway. We're waiting for macro timings before we're jumping into the market. So that was the first trade of the day, a really textbook setup. Lovely if you're at the charts for the first macro of the day. I get to the charts at 1:30. So that's 6:30 UK time, 1:30 New York time. So I've already seen that this has played out, but I've seen, again, a manipulation into previous day value area low, sweeping the Asia low, and then an aggressive move back into the range. So it's the same thing again. We've got an aggressive move out with an aggressive move back into the range as well. So textbook, love to see this. We can confirm this big bearish fair value gap as an inversion fair value gap. We can see it acted as resistance. Initially, we were respecting the 50% mark, and then we had this large bullish displacement back into the range, closing over the bearish fair value gap. Confirms it as an inversion fair value gap. We left a bullish fair value gap in its wake where it was overlapping. So again, we're monitoring the 50% level. In line with this, we have previous day value area low, so we're back inside our range. We've swept Asia range. We've failed to displace outside the Asia range, so we're back in. So we are expecting, again, trading the range, sweep one side of the range, back to the opposite side of the range. So a few confluences here stacking up. Divergence candles at the bottom. So using Tradeovate, I was able to see that these bullish candles actually had bearish delta in them. So we had sellers trying to sell this down, ultimately getting trapped by this large displacement. Now that we've trapped all of these traders, we're looking for a reason to go long. The macro opens up at 150. At 149, we get respect of this fair value gap and then a divergence candle again. So we've got sellers in this bullish candle here trying to sell this down, and they got trapped. So the candle closed bullish. That would be a signal to go long. Stop loss below the low. We're expecting these to be protected lows now because we have all of this absorption here, where again, Retail traders have been trying to sell this short. There's obviously a larger limit order in here, buying up all of the short positions, and then they want to trap them all and take it long. So stop loss below the low, it's a 6-point stop. Divergence candle is obviously over previous day again, similar to what we had up here, closing over previous week's point of control. This candle is closing over previous day value area high. So that's just a signature that I like to look for in price. If we're actually closing over one of the value areas within a macro, gives me extra confidence to take that trade. So we close over previous day's value area low, accelerate away. You can see that we had a break over this bearish candle, so that just confirms this as a bullish order block. So we expect this to hold 50%. Again, price comes, have a little bit of fluctuation around the 50% mark, and then price aggressively moves away. We would ultimately be targeting the engineered liquidity that we had from the first macro. Again, I would take 10 points because that is my trading plan. Trading with Apex, we have a trailing drawdown, which means that the stop loss or the drawdown is following us up all the time. So if you're in a profitable trade, even if you go break even and the trade reverses against you, so you get stopped out break even, you haven't lost anything, you will lose a load of drawdown when trading with Apex. So kind of a point of contention when trading Apex, but I actually find it very, very useful. It's made me much more consistent because instead of trying to hold out for these massive runs, you just take the base hits, get your profit, you're done. So I'm out at 10 points. Essentially a zero drawdown trade to 10 points. If you wanted to hold this through to the second macro, then we did take the engineered liquidity that we had from the first macro, aggressive move back into previous week's point of control, engineering more liquidity, and then ultimately I would expect, you can see the respect that we've got of previous day's value area low here, I would expect prices to come back up and at least retest previous day's point of control and the new week opening gap. So that would be my anticipation. But irrelevant, I'm out with my 10 points. I'm happy. I've had a very low stress trade. Grab the profit for the morning and we're done. So I hope that was useful. I hope you enjoyed it. If you're interested in following along with this trading style, then do consider taking a look at apextraderfunding.com. You'll see there's a discount code above. They're currently running 90% off for the first month. That's how I got started with them. I saw one of their 90% sales and it's like, what is it, $20 or something for an account, which is as cheap as trying to pay for the data on TradingView. So I was like, well, I might as well sign up for an Apex account. I get all of the live market data, plus I get the chance to try out trading in the futures market. And once you get profitable, which I was able to do, you're able to get funded. So you get yourself a 50k account on 90% off at the moment. I think it expires tomorrow, so you've not got long, to be honest with you. But yeah, discount code above for Apex Trader Funding. Go check them out. Get access to live data. Use them as a demo account just to get yourself comfortable with trading in the live futures markets. If you've got any questions or comments, leave them down below. It'd be great to hear from you. Have I already said subscribe? Usual stuff, like, subscribe, whatever. Thanks for watching. I'll be back again, hopefully tomorrow, with similar video, journaling the morning session in London. So I'll see you then. Thanks again.